Hello and welcome to Follow the Money. I'm Robert Tan. Join us as we explore the tools and insights you need to jumpstart your financial journey. Today we're talking about money, how it shapes our daily lives, the economy, and where it's heading next. From interest rates to investment opportunities, we'll break down the big picture and the small details that matter to most Filipinos. And joining us is Luis Limlingan, Head of Sales at Regina Capital Development Corporation. Good afternoon, Luis. Thank you for joining us this afternoon.
Yes, thank you. Good afternoon and pleasure to be on the show.
Okay, now, Luis, let's start with this. If money tells a story, what's the Philippine story right now?
Well, I think right now the market's been drifting the last few years, and I think people have just been waiting for a catalyst for them to go all in. I think if you summarize it, it's investors have deep pockets but short arms at this point, meaning they want something that will really entice them to buy into the Philippine market. But given that, even if the investors are still have been on the sidelines the last few months, the market remains very cheap, and that's why we have been pushing a lot of our investors is to slowly try to accumulate and wait for opportunities when the occasion presents itself.
Which industries do you think is best to invest right now?
Right now, we're not really pushing specific industries, but those companies that are very defensive in nature, those that pay really, really good dividends, have the capacity to even increase that payout in the medium to long term, and those with a proven track record. So if you look at the index, for example, right now, the top five performers, they're from all varied industries. You have gold, ICT, for example, and A-REIT. But they have a proven track record. They are paying a huge percentage of their income back to the shareholders. And we think that at least, despite the geopolitical tensions that are happening abroad, is that we think there is more earnings clarity versus the other companies right now.
Now, Luis, for those still on the fence on whether to invest or not today and still looking at the economic climate or the business climate here locally, what's the single number or signal every Filipino should watch to know how the economy is really doing?
I don't think really there's a single number, but they say that the of all the leading indicators, they say actually the Philippine equities market, or the stock market for all countries, actually, as the main barometer, because that the stock market, as they say, prices reflect all the information that is available right now. So if the market is whether the market is doing well or not, that is a reflection of all the information plus the sentiment moving forward of investors as to how the economy will be doing in the future. As I mentioned, we don't think there's really one single indicator because you look at several. I think it's very prudent that you keep many of these indicators intact, such as inflation, GDP, policy rates. But usually the one that moves first among all others usually is the stock market when there is compelling data that would entice investors to come in.
Now, if we focus on the stock market, with 3 straight rate cuts that has happened already, is this a rare chance for Filipinos to shift more into stocks, like you've mentioned, and investments, or is this just noise?
Well, let's backtrack. The start of the rate hikes happened around 3 years ago. I think during the beginning of the Russia and Ukraine tension happened, and we saw inflation not just in the Philippines and the US, all reach a peak of close to double digits. I think it was already above double digits in the US, and that's why there was the need to hike rates. And this was unprecedented, especially in the US, where we didn't see rates like that in maybe 25, 30 plus years. inflation never reached that high prior to that. Now, what we're seeing is, yes, the rate cuts have been quite aggressive versus the other years, but we don't think it's essentially rare at this point. But again, there's an opportunity because again, it's not it doesn't happen often, but it's in the realm of what's been happening in history, no? So we think there's an opportunity now. The problem we see is, will the rate cuts be consistent in the next meetings, right? And that's what we're really not sure of. Will they take a pause, or will they keep on cutting? Well, our stance is, if the inflation remains benign, it's actually been around 1%. If the peso also is remains at this level, then I think there's room for the BSP to cut. However, again, I think just recently there was news about the tariff situation, that
Yes.
even Court of Appeals said that it is unlawful for President Trump to enact these tariffs. They're still going to be put on hold, and they're going to be brought to the Supreme Court, and a decision might take as long as maybe 6 more weeks, the mid October, right? So again, there's so many things that are happening, but as I think as the rates go down, we think the best course of action is to slowly migrate it into the equities, because right now, for those who are, as I said, looking into the defensives, those that are paying really good dividends are going to slowly outweigh the lower interest rates that you're getting. Income.
Now, having said that, with certain uncertainties happening right now, where do you think money sleeps best today? Would it be in banks, bonds, stocks, or property, real estate?
Well, money sleeps best at the lowest risk type of investment. However, there's a trade-off. If you want to sleep well with the lowest risk type of investment, you're not going to be expecting that much return, because the risk is very small. But again, for what you're putting in, you're not really going to realize that much of a gain. So that's why, again,
That's more for the long term, right?
correct. But again, in short term, if there are opportunities, yes. But right now, you have to. I think everyone knows that the risk reward pyramid, the higher the risk, right, the higher the return. Of course, we're looking for something in between, moderate amount of risk, risk that you can sort of calculate and make the correct assumptions. That will give you a decent amount of returns. So that is what is we're trying to advocate.
Now, we're seeing inflation to be below 1%. Now, but what's the hidden risk people aren't seeing yet?
Well, well, I think it's very far, but what people ask me, isn't it good if inflation keeps falling? To a certain extent, yes. But what we're trying to avoid is a deflationary type of
Yes.
environment. Um, the most common example of this is what happened in Japan, because they're in a deflationary state and prices of goods are becoming much cheaper. Yes, it's good if you're a consumer, because what happens is you will postpone your purchase because you know that that good will be cheaper in a later period. However, as far as the whole economy is concerned, that's really going to make the economy stagnant, because there's no impetus for them to be buying, because they know that the price of goods will be at a cheaper price. Hopefully, that I think that we're still far from that. But others in the developed economies are quite worried that that might be the case.
Okay, Luis, we still have a lot to talk about, but we'll just take a short break. Follow the money. We'll be right back. Welcome back to Follow the Money. Still with us is Luis Limlingan, Head of Sales at Regina Capital Development Corporation. Now, Luis, when we see rice, power, and transport already hurting Filipinos' wallets, what's the next monster Filipinos should prepare for besides these?
Well, what you mentioned are the essential goods, right?
Yes.
So I think you go down the line, then it becomes more hurtful and impactful to the consumer. What you don't because again, there's an allocation. I think everyone knows that, or when a typical household makes a budget, it's really for the um, it's essentially for basic
Mm-hmm.
goods. But what will happen if this continues? You're going to hurt the discretionary spending, which you use for entertainment,
Mm-hmm.
probably investments, right? Because it all goes to basic needs. So that's one area where it might be a cause of concern, and hopefully, we hope that with inflation being very benign and then interest rates dropping, it will try to offset the overall increase in basic commodities.
Now, how can the average working Filipino mitigate this and help them increase their wealth instead of just it going to all these expenses, these basic needs?
Well, I think the best you can do, one is to do a lot of budgeting, right? And the budgeting also comes from trying to uh, just keep in uh, just try to keep up to date with
Mm-hmm.
all the developments that are happening. So for example, anecdotally, I have a lot of my colleagues who are entrepreneurs before, and they always ask me, well, when is the best time
Mm-hmm.
to, for example, take out a loan, right? Is it
Mm-hmm.
best to buy now or postpone it? And I tell them, well, that's why we have to follow what the uh, central banks are doing, what's their decision, and moving forward. There's always a forecast
Mm-hmm.
actually, uh, especially for the U.S. The Fed. They usually plot this on the long term more than a year, so they can actually try to forecast that. Um, so you try to anticipate this. And then the second thing is, especially for those who do a lot of import and exporting, how is it going to affect the peso, uh, medium to
Mm-hmm.
long term? And so in relation to that, the OFWs, those who are working abroad.
Yes.
So at least those type of things, whatever you think you can, as best to uh, not really anticipate, but you can try to forecast as best as possible. I think that's the best way
Mm-hmm.
to start things
Yes.
off, right? In
Uh-huh.
terms of,
Now, yes.
terms of finances.
True. That's good advice. Now, Luis, looking at the big issue that people are watching today, which is the flood control projects. Now, we see that billions go into flood control projects. Many have seen alleged ghost or substandard projects. How does corruption now, like this, damage investor and market confidence today?
Okay, well, if you are the investor, you have to try to analyze how does a specific project impact a company. If you look at it individually, you probably will say not so much. But I think in terms of the optics, it doesn't also bode well,
Mm-hmm.
especially if you're a foreigner from the outside who doesn't really understand the probably the political situation right now, and they might also remain on the sidelines,
Mm-hmm.
right? Because usually when the foreigners come in, they usually try to buy a basket which is across the board. But at least in terms of a company very specific, we don't think it's really going to impact it. But again, it's really on the optics, I think, that will probably make investors worry, especially for a foreigner.
What kind of observations have you seen being in an investment company, also trying to get investments from Filipinos and not only, but also foreigners? What's your observation today, and what should we really look at in terms of how we can best put our money into the industries that will ensure us growth in the, let's say, the next 6 to 12 months?
Well, investors now have been one is that they're much more stringent, and I think they're, especially a foreigner, they want actually much higher earnings potential. Now, the reason why I say this is because they're very aware of many things. One is again the political situation, which we just tackled. Second is also the forex risk, because even if, let's say, for example, I think I mentioned that several companies, I think around three to four actually in the index have returns of more than 25% right now, which is quite good. But what happens in terms of the forex losses, right? Are they how does that add up? What is going to be the net? So they also try to consider that. So I think that's why they're very selective at this point. They're not already going to buy specific sectors, but they're looking into individual names, and that's why I think it makes the decision making much more
Yes,
challenging.
today. Now, looking at this, Luis, what do you think is the biggest money myth that keeps Filipinos from growing their wealth?
There's several actually. But I think the biggest money or the more
What
relevant
stands
for
out?
me is that, well, I think that especially with the stock market, it's more of like they don't see it as a vehicle to grow. They think more of it's like I think more of like I don't want to say gambling, right? But I think that's how they view it. Um, because they don't really understand why they're buying into these specific companies, right? A lot of research that goes into it. And and along with that, they don't think that the equities market is quite liquid. In fact, that's the reason why people want to go into the equities market, because
Yeah.
at very versus, let's say, property or paintings, for example, when you buy or sell a stock, you actually on a buyer you have to settle it within 2 days, and also at the same time, if you're selling, you also have to settle it, or you should receive your funds T+2. So that's, I think, one of the myths they view with the stock market. I think it's very archaic at this point, and people need to change their view.
Now, when you look at the stock market, Luis, is it also one reason why people really don't get it? Is because we do lack some financial literacy and education about how the stock market works, and that not all stocks are really high risk. You can go to AAA companies and put your money there, and which are mid risk and equities. Is also that one reason that holds a lot of potential investors back?
I think that could be one of them. So many things that you have to clarify. What we're lacking is really the proper investment education to Filipinos. I think participation in the market locally is quite small. I think it's single digit percentage at this point, and you want to grow it. Unlike, I think, people in the US, and this is my assumption why it's been this way. I think in the US in the Philippines, probably not so long ago, 15, 20 years ago, people could actually enjoy a good return just by putting it in the banks, because your interest rates were very high, close to double digit. Whereas I think they were forced to look for alternatives because the returns were 1 to 2% only if you
Yeah.
just bank, right? So that was quite recently in the 90s, even the early 2000s. But fast forward now, where you can't get that sort of return, you're forced to look for alternatives. So
Alternative.
I think we sort of got stuck in that mindset, right? So
So
really, I
maybe
think
it has to change, and maybe a lot more awareness, education on that. But Luis, now let's go to our rapid fire questions. You don't have to explain, you just have to answer yes or no. Let's start with this. After rate cuts, is it time to dump your savings account and date the stock market? Yes or no?
uh wow, that's really I I'd be leaning more on the yes, but
Yes.
with some precaution.
Okay. Now, is corruption a bigger turnoff for investors than traffic in EDSA? Yes or no?
Wow, that's really
Hard.
well. I don't know anything about politics. I'll just say no.
Okay. Now, can the average Pinoy get richer faster than their electric bill going up? Yes or no?
Yes, probably yes.
Is poverty still the real big bad wolf?
Mm, I'd say no, because it's a symptom.
Okay. If money had to sleep somewhere tonight, is property still the comfiest bed? Yes or no?
I say no.
Okay, and finally, Luis, complete the sentence. Money is the root of all.
Money is the root of all problems and solutions to this world.
Okay, that's good. If you have problems, if you have solutions, then that's good. Thank you for your insights, Luis, for sharing your insights on the Philippine economy. Thank you.
Thank you very much, and pleasure being on the show.
All right. And when it comes to money, growth, and the real cost of living, the message is clear. As the late Senator Miriam Defensor Santiago once said, the cancer that demands our urgent attention is corruption and poverty. The Philippine economy is a story written in numbers, from rate cuts and inflation to investment opportunities and hidden risks. Insights from Luis Limlingan show how Filipinos can read the signals, avoid the pitfalls, and make smarter money moves. I'm Robert Tan. Stay curious, stay sharp, and always follow the money.